Hello, thanks for joining me today on my channel, and this is Discovering My Dividends. And dividend investors, especially new ones, beware. If you're investing in a dividend stock and you're looking it up on whatever platform you use to check out stocks for their basic information, and you see a stock that pays a dividend, it might not always pay a dividend, and it might not pay the dividend as often as you think it will. So how do you know? Well, do extended research, find out how often they pay the dividend. It's really just a Google search in a lot of cases, and you can find out about that. So here I'm going to tell you a little story about a stock I just recently purchased, and what's some of the warning signs that you might want to check into prior to buying your dividend stocks. Now, little disclaimer, I'm not an advisor. This is not an advice, but this is stuff that I've run into that I just want to share with you so you can hopefully maybe have a step up if you're not aware of this. And if you're an expert, then you probably don't want to listen to this. Here we go. So recently I invested in CIA, not the CIA clandestine services, but Champion Iron Limited. And they have a dividend listed as 4% right now as of this date when I'm doing this video, end of January. And when I looked at it, it was like, great. Now, I'm not necessarily looking at dividend stocks for the cash payment. Compounding, yes, but I kind of dabble with dividend stocks, more of a swing trader, because I like to have stocks that if I somehow make a miscalculation, because I'm not perfect, and I do that purchase, I still get the dividend. Now, Champion Iron hasn't released their dividend, this upcoming dividend yet, and some of the information I've found says they might not be doing a dividend. Now, that doesn't mean they're not going to do one in February 2025, but I'm getting the hint they might not. So I kind of have this question mark. Now, here's the thing, because I do swing trades and I look at Champion Iron, I look at it as going, well, it's down over the year, which is really good. It's down 31%. So for me, as a swing trader, I feel like at some point I'm going to get some growth out of this stock. I feel like it's slightly undervalued, and so it should potentially climb. They're possibly suspending the dividend because they're looking at growth opportunities. And so whether or not that information is true or not, I'm, again, a little bit gray on it, but I feel like if they don't give a dividend, it's not going to be as big a deal for me. I'm looking for that swing trade opportunity, and if I can get 5 to 10% in a very short period of time, that's great. If I get a couple dividends while I'm waiting for that swing to happen, that's also a good thing for me as well. So if you're looking for cash though, a company like this may be a problem. So you want to find companies that pay out dividends consistently, pay out over a long period of time, have a payout ratio that is acceptable to you, and essentially means that they're going to be sustainable, right? If they can't have a sustainable situation for their paying out a dividend, probably not going to happen. Now, 4% dividend rate yield is probably sustainable. So why are they not paying this out? Well, growth. If they're planning on growing or finding opportunities for the company, it's not because of a cash flow issue, then they might still be a good viable option for somebody wanting to buy into a dividend, because at some point they'll earn more money, which means their dividend potentially will go up as well. If not, it still increases the viability of the current dividend, so you're probably okay. Now, if at any point they can increase the value, have some growth, which will then increase the dividend, you're going to be further ahead. So missing one dividend payment, not a huge issue. But if you're looking for income on a consistent basis, this might be an issue if they are missing dividend payments. Now, when I went back and looked at their history, they weren't missing. So where does that leave us? Income investors, this might not be the type of stock you want to get into. So make sure you're checking that out. And if they do miss a payment, find out why. If they're just missing it for a growth opportunity, might not be a terrible thing to miss one or two. For growth investors, a company that's looking at growth, who's got a consistent dividend, has the ability to pay out that dividend, definitely good for you, right? So growth on the stock, growth on the dividend, potentially, and that's good. A stock that's down and has that potential to have, you know, it's undervalued at this point, has to have extra value going forward. Yeah, if you're a value investor, definitely a good thing. If you want to get something that's undervalued right now, potentially with growth, potentially with income payments in the future, it's kind of a win-win-win if you're a value investor. I feel like a stock like this might be what you're looking for. Now, again, I'm not an expert, so do your own research if you're planning on going with CIA. If you definitely are diving into stocks without looking, you're going to be in trouble, because stuff like this can prove to be a little bit troublesome and maybe even a little stressful if you're having the expectation you're going to get a dividend every time the dividend's supposed to come up. All right, thanks for joining me. See you next time.